right, all right. All right, all right. Let's bring it in a little bit, folks. I'm Big Chads. Really happy to have you here with me. Give me just a minute while I get things set up. Kind of fade the music down. We'll bring that back at the end. People often ask, what is that? Oh, that's Church of Eight Wheels. One of those like free YouTube, music you can get from YouTube. Folks, start out. Let me know if you can hear me okay. I'm checking out the chat room. I'm going to be monitoring the chat room, but I'm just hanging out. You're with me hanging out. I don't have like a team. I can't say like, hey, moderator. Not that I like want a team, but it's just me. So if I miss your message in the chat room, I'm sorry about that. But anyway, let me know if you can hear me. First of all, first and foremost, that's the most important thing. Waiting for good, loud and clear. Secondly, where are you listening from? This is a worldwide thing. It's fun that I can hit a few buttons. On the computer, I can go live and I can kind of talk to you and tell you what I think, how I'm feeling, what I think about the market. A little crunchy on the microphone. Yeah. So good. Everything's good, folks. Where are you from? We got Toronto in the house, Slovenia, Colombia, Poppy, Macedonia, Chicago, Italy, Philly. Look at this. Poland, Washington, D.C., Minnesota, Greece. This is awesome, right? I love it. Ithaca. It's up in upstate New York, I think. Australia, right? Pakistan, France. Folks, this is like, it's worldwide. So it's kind of cool to just stop for a minute and kind of think about that. The fact that we're all connecting here, we're doing this together, no matter where we are in the world, we're all basically playing the same game. And so it's fun. Anyway, thanks for joining me. I don't really do these all that often. You probably have noticed that because I worked super hard last year. I'm really trying to enjoy life this year, working on projects. I'm doing a bunch of stuff. But when I can take the time, I'm going to do a YouTube stream. I did a spaces yesterday. So let's start out. Let's get a few things, a little bit of quote unquote housekeeping out of the way. I'm on Twitter at Big Cheds. If you don't follow me there, you definitely should. I'm on YouTube at Cheds Trading. I mentioned that I did a Twitter Spaces. So if you click on that playlist, I've got 28. I need to upload the last like two. I need to upload the last two spaces that I did on Twitter. But I had a great. It's like and my spaces are Ask Me Anything, where I just kind of bring people on and we just hang out. Enjoy the life you built. Thank you very much. I'm trying to. So these spaces are great. I'm just hanging out and I bring people on. It's kind of an open and honest conversation. With nuance. And like on Twitter, we don't always get nuance because we're just tweeting limited characters. Does this person agree with me? Is there sarcasm? Is there not? And I like the fact you can kind of open things up with the Twitter Spaces. So check out that playlist. So I have some other great stuff. Check out the interview series. If you're brand new to trading, you really want to check out the masterclass webinar series. I kind of go down how to use Japanese candlesticks, classical charting techniques, how to use volume, moving averages, what's divergence, all that stuff. So check that out. I am the author of all three of these books, but Trading Wisdom, I'm probably most well known for Trading Wisdom. I've got a free version of that book here. I've got a third of the book in the Trading Wisdom playlist. That's available right now on Amazon. You can get that in Kindle, audiobook, hardcover, paperback, 4 formats. Look at the reviews. I mean, it's ridiculous. So it's done really well. People enjoy it. I actually just published my third book, Trading Quotes. Super proud of Trading Quotes. Hasn't like a ton of reviews yet, but people have reviewed it like it. It's 365 of my original quotes. So it's one quote a day, and then I kind of stop and I do like a review every quarter of my like 12 or 13 favorite quotes, and I expand on that. So it's a really cool book. I spent all last year working on it, and I published it. I'm super proud of it. That's part of the reason why I'm taking it easy. I just published another book. Like editing a book is really, really hard work. So I am a founding analyst at Bitcoin Live for almost 5 years. It'll be in 5 years in May. I post twice a week full market update. and I'm part of literally a world-class team of analysts. When you sign up, you get access to everything. So I've just, if you're really interested in learning kind of advanced market analysis and hearing from me twice a week, no matter what, like I don't skip videos, even when I'm sick or I'm on vacation. So check out Bitcoin Live. If you're looking for somewhere to trade, check out BingX. They're a really nice exchange. You can do crypto, forex, commodities, and indices. They've got copy trading, all that stuff. They've been around for a while. There's some information in the details. So I would say go ahead and check that out as well. So what are we gonna do? This is the last. What was the last live video I did? So I did a bunch of these are just me uploading spaces. And so look, 12.5 market moves, market moves. So like what is a market moves explained? These are great questions. I'll cover this. I mean, if I missed out, should I start to now invest? I'll kind of give you some of my thoughts. But what I do is I've selected some tweets. There's about 15, 20 tweets. And I'm going to look at where they came in the chart and kind of how we got here. So I'm going to try to catch us up. 252 of you, 42 of you live. Great to have you. I'm going to try to catch you up on how we got here, right? So I guess I'll briefly answer this question. So I mean, but investing's investing, and when you're investing, you're having a theory, and it's a longer term vision. So I mean, if you're investing, it's not really about buying at 20K or 18K or 22K. I mean, like, what's the point? But if you're trading, you're looking to enter a trade based on the price interaction with the level, and it's an idea that you can very clearly define. My idea is in play because the price is holding 20K support, right? And so if it loses 20K, you exit the trade. So there's a big difference between trading and investing. Let's start this out. Thanks for kind of bearing with me through the intro. Let's take the first tweet. So this is back. I'm going to copy the link. This is back in November 16th. Here we go. So this is right down here, basically near the bottom. I didn't nail the bottom. I'm not, I did nail the top in November, but I think I got lucky there, honestly, because I'm more of a trend follower. So I'm normally going to notice when the trend changes. I'm not necessarily going to like hit the nut bottom because it kind of goes against my philosophy. Like I want to avoid downtrends, but I'm always paying attention to sentiment. And I was really noticing sentiment and talking about it back here. And a lot of people were, pardon me, and I discussed this on Spaces yesterday. A lot of people were thinking we had a sentiment bottom here. And I really didn't feel it. I didn't see it. I've been around for several cycles. And I thought, it can get worse. It can get worse. And it really did start to get worse here. So back in November, we started to get that sentiment bottom. And the sentiment bottom sets the table, right? It's hard to quantify sentiment. I use social media, and you get a sense of is there too much enthusiasm? Is there too much despair? You kind of look at it and an imbalance. But sentiment bottomed in November. But at that point, I was still saying to myself, it's hard for me to go long because there's no price bottom yet. We're still just mean reversions under the 200 moving average, the blue line, right? Equal weighted, simple moving average. We had this mean reversion here rejected at the 200. We had all these mean reversions, right? Rejected, rejected, rejected. Up until recently, right? It had been really just a pretty steady, orderly downtrend. We were just on the heels of the loss of the 150-day range. 150-day range, and we broke down. Sentiment bottom, but really not a price bottom yet. And then you bounce in a very clean underside retest and rejection, right? Let's clean that up just a little bit. I'm just setting the table. I have a bunch of tweets to show you. But, you see how we had that 150-day range with the breakdown, the bounce, and the perfect retest and rejection. So that sets the table. And especially here, I mean, you're very aggressively taking a short here, right here in the middle of December, because it's a classic, what's called a pullback, a pullback or a bearish underside retest, the opposite of a throwback. Support, 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 fails. It does whatever it does some of these, boom, comes back, boom. It's an underside retest of loss. Support, it's called a pullback in classical charting. You're shorting there, and then it came back right back to range lows. And I was expecting the price to fail here. And we're looking at kind of a double rounded bottom, a double eve, kind of this guy and then this. And I was kind of expecting it to fail here because that's kind of what it had done in the past. That, sort of what happened here. And it's a downtrend. And most double bottoms fail, 2/3 of them, right? So you're just, for me, this is how I approach things, this is how I talk about them. Great to hear you again as well. Thank you so much. Thank you for saying that. So I've been kind of expecting things to fail. So that's why I wasn't jumping in, just based on a sentiment bottom, but I was aware of it, and it's worth for me to reflect later, maybe when I have that big, when I have this type of a sentiment call, maybe I should take, pay a little bit of attention to it. We'll see. It's something I'm reflecting on, right? So that's that tweet. So that's right there. So we're going to remove that because I get a lot of tweets. Next up, we have here. So this was December 7th. Let's go ahead and put that in. See where we get. December 7th. Let's remove that one. So we're right here. So what have we done? Now, this is before this retest rejection I talked about. Um, because I'm looking at this, and so this is the information we have at this point. Let's move the tweet over here. So we're this is what we have so far, right? When I put this out and I'm thinking, okay, shoulder, maybe we're going to do a head. And I'm always, you always want a good chart technician can articulate both the bullish and the bearish thesis, right? It's a really important concept. Because you have to always like say to yourself, am I missing something? So it's valuable to be able to look at things from both sides. And so I'm saying, okay, what would a bull thesis be here? Well, clearly it would be back up above 18.2, 18K, regardless of how exactly you define it. That's the bottom of the range. And so I'm saying to myself, Dave, great to see you, man. Great to catch you live. Um, Thank you so much. So I'm thinking, above 18.2 sets up the possibility of an inverted head and shoulders complex, right? So the word complex, that's from classical charting studies. You think about a head and shoulders, kind of the normal one, you just have a shoulder, a head, and a shoulder. So a complex is in this case two shoulders, multiple shoulders, right? So here you would have or can potentially have, right, shoulder, head, and then we're looking to see, and we'll get into that. I don't want to, get in too much yet what's coming up, but we could potentially be forming a right shoulder. So that's what I started to look at back here in December. Is my first kind of, it's like, all right, maybe we're going to form a head here, even though I think we're going lower. I'm going to start to really pay attention if we get above 18.2. I talked about that, and that's why I really paid attention to this level, right? So I started talking about a potential head and shoulders back then. We got rid of that one. And now we'll go here. This is me just complaining that Bitcoin's super boring, super boring. Bitcoin stable coin pegged to 17K. It's like we're just here. I mean, look at this. Boom, boom, boom. Nothing to do, nothing to talk about. It's kind of boring. Hello from Slovenia. Great to see you. Thank you so much. Greetings from Munich. Nice to see you as well. So it's back to being a stable coin. It's kind of boring. I'm just complaining, but it really was really super. For much of this consolidation channel, it's basically just sideways. This is a tweet from 2017. 18 rather, if my life was as stable as Bitcoin, I wouldn't need to see a therapist anymore. I mean, it's these moments when Bitcoin's just doing absolutely nothing, right? Absolutely nothing. And you're like, please do something. It's so stable. It's boring. Next up, we have 4 weeks. So I talked about, this is December 12th, pardon me. And I talked about how, eh, I talked about this on my public streams. I talked about this a lot in Bitcoin Live too, especially after the breakdown. I started to talk about this in November where we had this big breakdown, and the idea was that it's probably going to take a while to resolve this move, right? We need to be patient. We just went sideways for 150 days. I think it's unlikely for us to just bounce out of this in a couple weeks. And I'd said in this tweet, back at the end of November, what if we're just 2 weeks into another 140-day range? I mean, it ended up being like 60, 70 days, something like that. It was like 65 days. And so that's about half the size. That's a long time. That's 2 months of sideways. So I'd kind of set the table in my analysis, in my teachings, that we need to kind of be more patient. Thank you so much. Appreciate you saying that. Um, Hello from London. Great to see you. So I kind of set the table, be patient. Let's kind of see how things play out. And then so that me kind of updating that tweet saying 4 weeks so far. So it's always a good lesson in patience, especially if you've been here, you've done that. You've traded these moves, you got to be patient. All right. So now we have December 13th. I think it's cool how you can just paste it into the chart and see where I was. So what's going on here? So let's move it over. And again, let's view it as just what we knew so far. So Basically 18K tags the MA50. So this is a big deal. So tag the simple moving average 50, right? An MA equal weighted SMA versus an EMA exponential moving average, more sensitive to short-term price movement. That's why I use EMA for like an 8 to 12, 24, 8 to 12 to 26. And for longer term, use the regular moving average. For 50, 100, 200, you want to use a regular moving average. So it tags the MA50 for the first time. That's notable because it's a sign, a couple things. First of all, it's a sign that the mean reversion, there has been a mean reversion, right? In this case, you have a lower upper Bollinger Band move. That's a mean reversion. You have a move 15K up to 18K. That's a pretty good percentage move. You've had a mean reversion because you had a breakdown and then a retest of the 50 MA, right? So, with this type of a moving average, usually you're going to reject the first time you kind of tag it, you kind of come back and you're looking for a higher low. That's essentially what we did get. But at the time, it's just something to pay attention to because um, it's a logical spot for the trend to continue. There has been a mean reversion. There's been a washout. There's been a resetting of oscillators. There's been that type of a thing. Thank you. This is what I look for. I try to be a good teacher. Thank you. So there's been a resetting of the oscillators, and there you are at the MA50, and it just happens to line up with kind of the underside of this lost support. So you're paying attention. So there it is. 17.8 tags MA50. That's one of my tweets from basically saying, pay attention, go take a look at the chart. We're at an interesting area. Next up, here we go. I think this is the next day or the same day. And I said, let's delete that one. 18.2K trigger level looms just above because that's a long trigger level. And that's also a reference to, I talked about the head and shoulder setup, and this would have been the neck. And then clearly you're back up above the left shoulder and how this, by that time in my streams, everywhere, YouTube, Bitcoin Live spaces, we talked about this being a lost support level and how significant it would be to get back up above that levels. And you don't even really that should be implicit. That should be obvious to anyone who kind of studies TA. The bounce into the underside, you're at the trigger level, it looms just overhead, which means we're right there. Okay. What was the high of this candle? The high of this candle was 18.4, basically. So, I mean, it basically bounced right up to and rejected at the trigger level. So, at this point, you're thinking, okay, man, wow, like Bitcoin's trading in a very neat and clean and orderly way, right? Let's go to the next tweet. High wave. High wave. I put out the tweet. I want people to and this is a reply to what I said earlier. Might be trading the long thesis, maybe turning into an upthrust and high wave. So it's like, well, Chet, what's a high wave? I want you to Google things. I want you to go look them up. I want you to be hungry. So let's clean this up. Let's clean this up here. And also, I don't have time to explain every tweet every time. That's why I do these videos. That's why I do spaces. That's why I have those masterclass webinars. High wave candle. You've got a really long upper shadow, decent lower shadow. It's a volatility candle. It's a pausing candle at the MA50, at the underside of the prior support, lost support, lowered upper Bollinger Band move, all these things we've talked about. And it's an upthrust. What does that mean? Well, what it means is it had the prior high, broke up above the prior high, right, which was like 18, came back below it. That's a momentum reversal. You're always watching for upthrusts and springs, the resistance, the resistance, the resistance. It broke up above it. It came back below it. That's the deviation, right? You're always kind of watching for that, of course, in combination, in concert with other things. We have the high wave rejection at the DMA 50, the daily moving average 50 right there, and the upper Bollinger Band candlestick signals. You want to look for them, the context, Japanese candlestick signals, even, this isn't necessarily a candlestick signal other than the wick, but, it's, even in classical charting, just the upthrust at the upper Bollinger Band, any kind of reversal signal, it worked well at a Bollinger Band because that shows a price movement near kind of the high or the low of the range. So at upper BB is often significant. Shooting star at upper Bollinger Band, gravestone doji, TriStar Doji, multiple small bodies after, Maribozus, all this, all these potential things that we talk about. High wave with rejection. All right. Next up, we have This was interesting. This is a sentiment check from December 15th. Let's put that in there. Somebody in the spaces brought this up to me. I'd forgotten about it. So this is right here. This is right after the rejection. And the question was, is the bottom in? And really, most people thought the bottom was not in, and that's interesting. I mean, that's sentiment. And they were most of them were wrong, right? Not sure. I think I clicked not sure because I wasn't sure. But these people, hey, good to you though. 18%. Congrats. You nailed it. But this is interesting, kind of a sentiment check. This is an interesting sentiment check here. So let's continue on. Okay, this is interesting. So we got about 15 tweets left. Hopefully you're patient. January 5th, only a $260 range between the upper and lower Bollinger Band on daily. So what's next? All right, only $260 range. So, I mean, it was just like so Bollinger Bands tightened after, we're talking about 45, 50 days of sideways at this point. The bands tightened this way. They tightened, kind of a presage or a indicator that volatility is around the corner, right? And we just had like a really, really tight Bollinger Band. I think if you pull up the indicator Bollinger Band width percentage, it was like the tightest they'd been in like 2 or 3 years. So it was like, okay, like get ready. There's a big move coming one way or another. So that's another clue to start to really pay attention. And we did start a major move within a few days. So that was a pretty good signal, or a pretty good piece of information, not necessarily a signal. And then here we go. Bitcoin breaks the top of yesterday's shooting star. Alec cred never fails. He's Alex Baldwin's my favorite shooting star. I mean, you can't get away from this guy. He never fails. So Bitcoin breaks the top of yesterday's shooting star candle. So here we go. Let's slide it in. Shooting star candle. So this is interesting because I talked about thinking we kind of fail in the double bottom here, and then you get this candle, you get this shooting star at the upper Bollinger Band, right? That's a bearish reversal candlestick. No confirmation. We didn't close below it, right? We didn't have any follow through. In fact, the following candle, we broke the top. We broke the top of that range. That's something to really pay attention to. Wow. Thanks, Vanessa. Appreciate you. Appreciate you very much. So, Bitcoin breaks the top of yesterday's shooting star candle. That was like, okay, interesting. Bulls have some mojo here. It looked like it should have rejected. It didn't. Okay. All right, here we go again. Bitcoin fast approaching key daily pivot, 18.2K, January 11th. Let's keep it going, friends. I'm going to catch you up. It's been too long. And we're right there. It's in this candle. We're very fast, very closely getting to this pivot level. And again, let's see what we know so far. We just know that much, right? We're getting right up to the bottom of support that we lost, where it rejected last time. You already knew exactly where to watch. There was no question where to watch. There was no debate where to watch. It's one of those moments where it's rare. It's nice and easy. The price is telling you, like, watch right here, watch right here, watch right here, watch right here. Nice, clean, and easy. Fast approaching daily pivot. 272 of you. Thanks for hanging out with Cheds. We got another 10 or so more, 10, 15. Here we go. And January 12th, the long signal. This is when I went long. I took a long in this candle as soon as we broke 18.5. Bitcoin breaks the December 14th high, this high right here, above 18.5K, which was really just a little bit more of a conservative level than 18.2. So I use that personally as a long trigger. And I tweeted out here very clearly, triggering long. And it was interesting. As soon as it cleared 18.5, the price just accelerated and it went almost immediately to like 19.1. Kind of came back, went to like 18.7, and continued. So the price told you for a long time where to watch, right? The price told you where to watch, especially since the beginning of September. Bounced, came back, support, bounce, support, bounce, support, came back, bounced, did not hold support, right? Fell down, bounced, rejected. So it's been telling you where to watch for a long time. And then boom, we get the long trigger. This was, and what's interesting about this is like, even if you're a bear, you have to go long here because the trend has clearly changed. This was a 10 out of 10 momentum pivot signal that you couldn't ignore. You had to go long. So there it was. It broke, it broke 18.5. Even if you thought I was going to go lower, which I did. I had to stop on a dime and pivot, right? You need to pivot when the price changes. The price told us for months to watch this level, and when it flipped it, I have to pay attention. I'm not gonna ignore the price. I'm not gonna sit here and teach you and tell you to listen to the price and ignore it, right? So, I practice what I preach. I'm trying to, give you my best advice. Went long. Um, I went long there at Gordon. Thanks, man. Appreciate that, brother. I went long right there, and the rest is history. Kind of a beautiful, beautiful trade so far. And I'm sure people are telling me you're an idiot and here if you read the replies, but whatever. It's fun. You can't, if everyone agreed, we'd have no market. It's good to have different styles. And this is me. Yeah, it's fun to be bullish when it's bullish. And this is me kind of being like, hey, we're pretty bullish. So this is on January we'll see in a second here. January 12th. And this is during that candle, and it's like kind of further explaining why I've gone long. And Bitcoin breaking back into the 150-day range is a big deal. It's a big deal. It is a big, big, big deal. We have this range. What did I just do? We're good. We're good, friends. So you've got this range, and you're just in this range. And there's loads of the range forever, long, 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 and you lose it. Come back and reject. You do whatever. Now you get back into the range. Right, that's a huge deal because you should have had further fall through and downside momentum from a break of this long a consolidation range, and we didn't. We broke back up above it. Back into the 150-day range is a huge, huge deal. That's why I went long, and that's why I was clear the trend was reversing. And also Ethereum back over the daily MA200. At that point, we'd seen right there, boom. This is on the same day. That's on this day. Boom, Ethereum. Right, back over the why is it a big deal, for Ethereum? Well, look where the bounce rejected. Mean reversion rejected November. Look where the mean reversion rejected back in April. Look where it had rejected the last 2 bounces, major bounces. Boom, we're back up above it. That's notable. And then some pretty good follow through, just even on that simple observation, 1,400 to like 1,700, right? You don't always have to nail the bottom. You can get some really nice, easy trades by waiting for major signals. Let's go back to the king, back to Bitcoin. Let's go to next tweet. If 20K flips, FOMO will intensify. Am I shit posting? Whatever. Maybe, maybe not, but I'm also just being honest. Um, you know, it's true because people who wanted to get in and didn't get in 18.5, they're gonna FOMO at 20K. And they did, and we had follow through. I mean, the thing ran 25K, right? So if you flip, and this is again, let's move it over and we'll do like, what do we know? It's kind of so far, we're right about there. And if we flip 20K, FOMO will intensify, and it did. FOMO intensified. The rest is history. Let's see. This is interesting. This is BTC notable January 13th. So we're back up above the key trigger level. And now it's notable. We've actually tagged the daily MA200, the blue line, for the first time since last March. Boom, all the way back here where that relief rally failed. If you remember from my videos on YouTube, we talked about tracking the daily EMA 34, where the EMA 34 had rejected, aka secondary downtrend resistance. And we finally here captured it sideways, broke the top of the range, boom, right? And should have continued and we didn't. You kind of got a fake long signal here. This is almost like this was 18K, right? You had here the bottom here at 46K, pretty well described, attempted double bottoming. That level failed, it came back, it rejected, boom, you broke up above the level, boom, the 200 sent it back down, right? So we kind of went over this in great, great, great detail. And you can just look back at my old videos if that's not enough. But here, boom, we're back to it again for the first time. That's notable. That's something to pay attention to because you could have very easily rejected at the 200. Now you're coming back and you're buying the retest or the throwback 18.5 if you get it, which we didn't. Next up, got to respect the pump. I'll be honest. Next day, you got to respect the pump. Like that guy, my buddy Ivan in Tech has this famous little thing where he's like, respect the pump. And there it is. I'm legit surprised by the strength of BTC. Got to respect the pump, and it was strong. And I'm like, wow, we're above the 200 now. We were all the way in like 21K. I was surprised. It was stronger than I had anticipated, but That's I was already long, so I didn't mind it. But there's me just being honest with you. Legit surprised by the strength of the pump. 9, 6, 9, 12. I still wow, I have like 18 more tweets. So I think I'm gonna be doing like 20, 25. That's a lot. New line in the sand. So I'm kind of taking you through step by step. I'm catching you up on the last 6 weeks of price action. New line in the sand. Why? Well, we had the bounce, and then we initially we had the first attempted lower high break. We paused, we consolidated there. Looked like it was going to turn around. Look at that, the big old outside bar right on January 18th. Big old outside bar. Thank you so much. Um, thank you so much, Lucas, and thank you for saying that, Anthony. That's a wonderful way to put it. Um, we had the first lower high attempt, the break of the lower high there. We kind of paused, and then we have this outside bar. It's pretty scary, but we're still above the daily EMA 8. I'm still going to be bullish because that's primary uptrend support, and you're still just an upper to EMA 8 potential move. Pardon me, you can see how well that held, for a couple of weeks after that. So it was an interesting kind of a touch and go place, but I was still edge bulls given the momentum, given that it was natural just to kind of do a consolidation. So I didn't put too much weight into the outside bar myself. I feel like I'm missing volume. Why am I missing volume? Why am I missing volume? Let's get that back. That's a problem. Now we have volume back. And there wasn't a lot of volume on the outside bar either, which kind of to me suggested it's more of just a kind of a consolidation candle. But now we have a new line in the sand. So now we have a new level to watch. And again, let's kind of move over and see what we knew at the time. We're kind of right here. As you're just seeing a strong bounce into a level, maybe be cautious. And again, thinking if we do reject here, I'm looking to buy the dip. Certainly 18.5. You're probably at 20K at the EMA 8. So you're in buy the dip mode, watching for consolidation, and then we get a consolidation break. New line in the sand. Let's go to first close. And this is on the 13th as well. I don't know if I jumped around days or not. First close above, and we kind of closed at it here. Here we really closed above it. First close above the daily 200 in more than 2 years. That was a big deal, notable. So that's me saying this is a further evidence of weakening bear momentum. Oh, sorry, got myself December 2021. So I think so it was less. It wasn't 2 years, just 1 year. This is me correcting myself. So it was the first close above it in 1 year. That's still notable. It's a sign of weakening bear momentum. We had seen that. We saw that with the recapture of 18K. And even though we were kind of testing this lower high, we still had evidence of weakening bear momentum. We go over to bull thesis in play. This is me kind of referring to, this is the 14th time about the potential of an inverted head and shoulders. This is me referring back to what I said on December 7th. We talked about that earlier. One of the first tweets I referenced back here. And I'm saying we now have that really in play where we're looking at the potential of a inverted head and shoulders complex, multiple shoulders, head, and then some type of a right shoulder. I still think that's most likely. We'll get to that in a minute. So bull thesis now in play. I'm kind of referencing back, giving people kind of a big picture view of what I think's going on. Let's see. So you should go. This is interesting. You should love a good dip, right? You should love a good dip if you think the bottom is in, right? And it's true. We get into this mode where it's green, 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 and then a little bit of red in a certain type of moment, right? Green, 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 a little bit of red, and you'd kind of freak out, right? You should love a good dip if you think the bottom is in. And so when was this? What kind of day was this on, Big Cheds? There, what are we doing? What are you saying to us, Cheds? It's on this day. It's me, it's on this day. And I'm basically saying, yeah, ooh, scary outside bar. But I'm weak volume. We're above the EMA 8. And it's like you definitely want to buy the EMA 8, that first retest. So you should love a good dip if you think the bottom is in. And there you go. You had your dip. Everybody wants a pullback until it actually comes, right? That's a quote from Trading Quotes. So there it is. You had your dip, you had your pullback, boom, continuation, right? So should love a good dip. Next, let's go. Next level of interest to me is 22.5K. So 22.5K. Boom. Because we broke up above the lower high. So now I'm saying pay attention to 22.5K. Well, remember back when we had this triple negative divergence in Bitcoin, and we had the attempted lower high, and then the mean reversion bounced and failed here at 22.5K. So we've been watching that. That's still a level of interest even to today. And that kind of we dragged that over, and that corresponds with the lows of this consolidation channel. So here's me, somewhere in this candle, probably, right around here as we're breaking this lower high. I'm saying the next level to really pay attention to is 22.5. We kind of paused there for a while, but really grinded higher, stronger than I anticipated again. Next level of interest, 22.5K. And so here is me saying, look, bear thesis is dead. If if it can break over 25.5, right? This is back when it was at 23K. This is back a few weeks ago. Let's take a look at it. Where was this on the chart? Did I copy that correctly? Let's try it again. Let's copy that. We'll go there. We'll go weekly. Let's go boom. Let's see what we got. All right. So over here, and I'm saying, bear thesis is dead because where are my Bollinger Bands? I swear I'm doing this to myself. I swear I'm doing this to myself. What am I doing? There we go. So, it's funny. I'm probably just deleted them and didn't pay attention. So, um, bear thesis is dead. A price flips 25.5. Why? Right. So, what's in classical charting, the 200 moving average is the trend, right? And for the history of Bitcoin, it's held, right? It's held. It held here, briefly dipped below, right? 15, held in this low, held in the March COVID lows, closed basically at it. And then we spent the most time in history below it here, right? So we had that evidence of longer term weakening trend. If the price now can bounce back and be back up above that, you have the price above a rising 200, which makes it a confirmed uptrend. So you would have the recapture of an important moving average, also the recapture of the 50 moving average. No, we know how important the MA50 is. We tracked that back in that long summer of 2021, where it found support, and then it started to close below it. This is where you really started to get worried if you hadn't already sold up here. You're really starting to get worried here. Loss of the 50, the bounce, the underside retest, clean rejection here. You're watching the 50 and the 200. Also lines up with the May 12th lows, and where the bounce rejected in August 15th. So you're paying again. It comes back to we pay attention to the price. We listen to the price. When the price tells us where to watch, we really pay attention. So for this still to be bearish, it cannot get back up above the MA200 and the MA50 and this key level where it rejected last time. Like the bear thesis is pretty much dead. The bear thesis became really weakened when it was, able to get back up above 18K here, really severely weakened. But it's dead. It's pretty much dead if it gets back up above this level. I think if it breaks back up above here, the bottom is definitely in. Could go to 20, 28, 30K, come back, reject. You're definitely buying here on a retest. You're buying anything, any kind of a dip there. If it gets above 25.5, the bottom's in, like 95%, just based on everything I understand that I've read, I've studied professionally, I've practiced my whole career. Just listening to the price and understanding a trend. If it gets back up above 25.5, the bottom's in, the bear thesis is dead if it flips that level. Here we go. This is me saying January 26th. Bitcoin and Ethereum are both holding DEMA8, daily EMA8 support. Go there. Let's get rid of this guy. Let's go to the daily. And we are still holding. Let's clean it up. Getting a little bit messy. We're still holding the daily EMA8 support. The green line, boom, it held. It held. So it means you're still buying all dips until you really start to lose the 8. And we didn't really start to lose it till, a little like a week or so later. From here, we pushed down, we made a new high. Yes, it kind of paused. It's consolidated a little bit, but this is reminding people of the mode. This is the reminding people of the mode that we're in. Appreciate that. Yeah, you got to spread the love. I like to spread the love. This is telling people the mode we're in. We're in a buy the dip mode. We're in kind of that initial impulse of daily EMA8 support. Same was true at this time for Ethereum. Let's go ahead and paste that in. We're still holding at this point daily EMA8. All right. What do we have next? We have a few more. Let's get through them. And then, boom, BTC trades. It's me saying, end of January, daily's still quite clean. Bears haven't done any damage yet. A lot of people still buy the dip until proven otherwise. End of January, and then the following day, like we just get a new high or whatever. And reminding people because a lot of people already calling top, blah blah blah. Here I'm like, look, we're still clean. Here we're still clean. It still looks good. We're still in EMA 8. Boom, made a new high. Highest price since August 14th, cracking 24K. And I was like, all right, wow, that's pretty good. I'm still thinking at this point, it's gonna still have to test 25 to 25.5K. It's still inevitable. It's just like the law of momentum. We're still gonna need to test the key level. The key level was right there, and we're still below it. So I'm thinking, okay, like, we get a dip, fine. It's gonna still needs to test that level. Still in the back of my mind. Highest price so far, and then Bears last stand 25.5. Get your tickets ready. I'm reminding people that that's the key level. Pay attention to it. And here we go. This will be interesting. My 2 cents. Neither the golden cross than daily or the weekly cross of Bitcoin tell us anything we don't know. Good talking points, but no new information. It's true. You already know everything. You know the price, where the price is in relation to moving averages. You know where the price is in relation to support and resistance. Like a golden cross doesn't really tell us anything, but there's a lot to talk about with moving average crosses. We'll start with the weekly cross. The weekly cross. So with a moving average cross, you want the price to be right where the moving averages are crossing, right? Otherwise, some part of that move is already baked in, right? So in the daily chart, for example, you have the moving average cross happening down here at 19K, but when it's crossing, the price is already up here at like 23K. So some decent amount of that move is already baked in, right? So with the best case, the most potent or most powerful signal for a moving average cross is you would want the price to be right there at the cross, right? That to me have the most powerful signal. Okay. Secondly, you want to look at like a moving average cross. It needs a trendy market to cross and reverse from. This is pretty sideways action. And so that gives us look at the pace of look at the slope of the MA50. Like if you have the 200 and then you have the 50 chopping through it, that's a pretty good signal. But if it's coming in like this, it's kind of like coming in and crossing that way. It could very easily come back and, flatten out and cross back over. So you want to look at the slope of the crossing moving average, right? So you want to think about the market. Is it trending, the price proximity to the cross, and then kind of the slope of the trending moving average. But still, they don't really tell you anything. It's not like it tells you what's going to happen. It tells you what has already happened, and you already know that. You're already studying the chart. You already understand what the key levels are to watch. So it's one of those like fun things to talk about, but it doesn't actually give you anything. There's no new information, right? We already know everything. We already know all the context in this chart. I gave it to you before this tweet even came up. So we already know everything coming in. This cross doesn't do anything for us. These are not actionable. It shouldn't do anything. So this is interesting. So this would be a shame for Bitcoin bears if this sub 22.5K move turns into a deviation. So here's what I was thinking. I was kind of remembering in the back of my mind what happened in October and November 2021. When we had, this was 60K and we had a brief break below it before marching to the all-time high. So it'll be an absolute shame. This is me saying it'd be a shame for bears if this move, again, let's show you what we knew at the time. We're right here. It would be a shame if this turned into a deviation. Well, look, it turned into that's exactly what happened. Turned into a deviation, the dip below, the beautiful throwback to the 21.5K, lower high level, right? And bounced right off of it. It became a deviation. I think I have a visual, and this is it. So, and I said, this is me saying it'd be a shame, like mid-October through early November 2021. Here it is. This is what it did. The 60K level. Remember, I don't know if you folks remember that. It broke right below. The 60K came back up above and made the new high. And I was saying, look at that. I'm thinking that's what we're going to do based on momentum. And look what happened, right? So it'd be a shame if it turned into a deviation. It did turn into a deviation. Sorry, bears. That's a kind of a fun one. This one, it's like I had some guy send me this DM, and I'm like, I don't know what to do with this. He says, I don't know what to do with this. He says, I hope you're having a great time. Do you have like, can you send me a PDF on trading? First, I don't have any PDFs, but I have my free version of Trading Wisdom. But as he said, he's basically his friend told him that Dixie is the most important thing to analyze with the Bitcoin chart, and like drove me crazy. I'm like, what are you talking about? If you're trading the Bitcoin chart, trade the Bitcoin chart based on what the price is doing in relation to support and resistance. You need to trade within the four corners of the chart. We covered that visual, and let's see if I have it. I talked about a four corners tweet, but you need to be trading within the four corners of the chart. That means you need to be trading based on just the information in front of you. The minute you start looking at order book and on chain, and news releases and chat rooms and all this other stuff, it takes you away from the most important thing. What is the price doing? Does it hold support or not? Am I on the right time frame? Am I listening when the price is telling me where to watch, right? These key levels. Like sometimes, like if you look at Bitcoin, when Bitcoin made its move, back in April, when it made this move right here, this ridiculous move, Dixie was also rising, right? So sometimes there's a correlation, sometimes there's not. Sometimes when Dixie goes up, Bitcoin goes down, and sometimes when Dixie goes up, Bitcoin goes up. Like, so what are we doing? Like, this thing drove me crazy. The most important thing to look at, it's like, no, who's ever teaching you that, like, find another teacher, right? So, like, focus on the four corners of the chart you are trading. The four corners is the only information, and the only exception I think is sentiment, because it gives you a little nuance. But just like stop looking. If you want to trade Bitcoin, don't stop looking at the Dixie. All right. This is an important tweet. So proper trading. This is Capo, and it's just kind of a good teaching example. It's most people didn't buy the bottom, so now they're mad or whatever. Like the framing of this, I think, is not helpful. It's not about buying the bottom. It's about trading with the trend. And I just explained how, even though I thought the price was going to go lower and tag 12K just based on momentum, I had to go long. I literally don't have a choice because I'm listening to the price. I had to go long here when it broke back up above 18.5 and it got back into the 150-day range. And I showed you all those tweets. I had no choice. So it's not about buying the bottom or selling the top. It's about riding the trend and changing bias when the trend does. It's really important to not let yourself think the way he's talking about, like buying the bottom. It's just not what it's about, right? That when you say it that way, it's a red herring because it's saying that you have to nail the bottom or the top. No, that's not what it's about. Again, it's about taking the best guess probabilistically based on the information you have. It's bearish, bearish, bearish. Oh, we're back above 18.5. Whoa, big momentum pivot. Really need to pay attention. Now we're adding to our longs. We're above the 200. Break of 21.5, new level to watch, 22.5. And now we're right here at the top. So, that was an important tweet to talk about. And then boom, Bitcoin highest price since June 13th, 2022. So where do we go next? I really think it's not surprising to me that it's rejecting here initially at 25.5 because it really should. We've had just an unbelievable bounce. Appreciate you. Thank you, Olds. We had such an unbelievable bounce off the lows. And like we showed here in the weekly chart, we just had a bounce into the daily MA50, the daily MA200, where the move rejected back in August, where we found support back in May. We're coming up on almost an hour. I'll wrap up pretty soon. So you're expecting it to fail here, and that's okay because you're looking for a higher low. You want to buy a dip, right? So if you go to the daily chart, we say, okay, well, we know what really needs to hold will be the most ideal level, and we're really high confidence buying the dip here, 21.5. But I think we also want to be looking at 22.5, the bottom of this consolidation zone, which set up the deviation, stretched that over. That was the failed higher low. That was where that mean reversion failed. These are levels we've been watching. We're very familiar with these levels because we study the chart. And again, we're only trading charts that we've been watching, that that we've studied and we have muscle memory on, and that we have, we can contextualize volatility when it comes, right? So what do we do here? So like on the weekly, it's not surprising to me to see us pause here, and I think maybe form some type of a right shoulder, And so where's the bottom of the right shoulder? Is this the bottom of the right shoulder, 21.5? Does it maybe go lower? There, I think we need to be patient here for the next, I think probably couple weeks. Um, the other side of that is if we do not reject here, if we kind of mount a rally in the next couple days, like you have to add to your long. Any long you took from 18.5, you're adding to it on the break of 25.5. All right. Or if you're not in yet, you add to that, you jump in at that point. You cannot ignore if the price breaks up above 25.5, the bear thesis is dead, right? So there's no guarantee that it breaks up above 25.5, which is why I think the bottom is probably in. But I'm open to the idea that we stop, we pause, we try to form a right shoulder. There's your neck baseline. We pause, we try to form a right shoulder, maybe something like this. And then maybe, a bears, okay, then we invalidate the right shoulder. That would be a sell signal. And then if we get below 18K, major, major, major trouble. So we're still level to level trading. We need to see what happens here, right? We need to think about these in terms of probabilities and what we're going to do if X happens, if Y happens. And that's how I'm going to approach it. So you can find me on Twitter at Big Cheds. Hopefully you're enjoying that content. I try to be active, but sometimes I'm just hanging out. I worked really hard last year and I just published a new book. So I'm kind of hanging out a little bit. Trading Quotes, I'm super, super, super proud. Which book is it? Trading Quotes. I'm super proud of this book. It's 365 original quotes from me, one quote a day, and then I do like a review every quarter. I recorded the audiobook. It's a great, check it out. Check all that stuff out. Of course, the author of Trading Wisdom, 50 Lessons Every Trader Should Know. By the way, I am also published My Battles with Cancer, a cancer memoir. I'm actually rewriting it right now. But if you know anyone who you think would enjoy the benefit from the book, who would help them, just get me your email. I'll send you the book. But I am doing a rewrite on that. It's actually interesting. I actually just finished publishing a rewrite on Trading Wisdom. This is the third version of the book. I haven't announced it yet, but I kind of went through and updated things, updated some quotes, cleaned up the writing a little bit. It's got the Great on Kindle tag, which is pretty cool. But I just did a rewrite. For the last 2 months, I've been re-editing Trading Wisdom. I haven't announced it yet. I'm telling you now. 4 formats, check that out. If you have Kindle, I think it will automatically download. I am a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. I've been doing market reports there for almost 5 years. It'll be 5 years in May. It is literally a world-class team, and it's something I'm really incredibly proud of being part of. So if you want to really learn how to trade, I would encourage you to check out Bitcoin Live. The link is in the comments. And if you're looking for somewhere to trade, check out BingX. It's a great exchange. They've got crypto, forex, commodities, indices. You can do the copy trading. I've had a great experience with them, and the people that I've worked with have as well. So the link for that as well is in the comments or in the description. And there's a sign up bonus, all that stuff. Encourage you to take advantage of my YouTube, the playlist. Something's really cool to new traders, the Twitter Spaces. These are like 2-3 hour long conversations where I just take questions from people. And I would encourage you to check that out. Check out the masterclass tutorial series. Really going to help you understand volume, moving averages, how to do technical analysis. And of course, check out the free version of my book, Trading Wisdom. I'm going to check back in here with the chat room and just see how everybody is doing. Trading Wisdom Director's Cut. Yep. Hit the likes. It's all right. I'm not going to beg for likes or whatever. YouTube's cool, but I'm not like super stressing about it. So if you like it, if you don't like it, that's cool. Thank you very much, Lucas. Love you tomorrow. Replay the stream. Much blessing. Thank you so much, folks. This has been a lot of fun. Let's get this back again. And folks, I hope you have there we go, folks. I hope you have a wonderful, wonderful weekend. I will catch you on Twitter. I'll catch you around the bend. And here we go.